This is Financial Inclusion Unlocked, an SIJ production.
Welcome to the very first episode of the Financial Inclusion Unlocked podcast. It is so great to have you here. My name is Jack Farron. I'm a social entrepreneur from the UK and passionate about the potential of financial inclusion in unlocking the United Nations Sustainable Development Goals. I've started this show to meet and share the stories of innovators and experts across the globe working on different pieces of the financial inclusion puzzle. In Series 1, we talk instant payments, parametric insurance, refugee finance, village saving groups, coffee, digital financial literacy, and so much more. Don't miss an episode by subscribing or following on your favourite platform. This podcast was produced by SIJ Media, and our first series is kindly supported by the Swiss Capacity Building Facility. Series 1, Episode 1. What if sending money was as instant as sending a message? In our very first episode, I meet with Thomas Jan Pivotau, financial sector specialist at the World Bank, to explore Project Fast. Retail fast payments across payment service providers allow for immediate fund availability to beneficiaries 24 hours a day, 365 days a year, or 366 on a leap year. Through my discussion with Thomas, I learned more about Project Fast and how this fits in with the World Bank's overall mission. We discussed the difference between instant payments and central bank digital currencies, or CBDCs, and how fast payment systems are driving inclusion in local markets. Thomas, thanks so much for joining me on the Financial Inclusion Unlocked podcast. Really looking forward to today's discussion.
Thank you, Jack. Same for me.
So Thomas, financial inclusion, when was the moment that you decided to kind of start working and committing yourself to this space for your career?
I'm part of a team at the World Bank that works on payment systems and financial inclusion. Before that, I was with the French Central Bank, Banque de France, already working in the space of payment systems. And I've always been interested by the field of development and making an impact from this perspective. So it was a logical choice for me to join the World Bank. And so currently my team at the World Bank leads the work to promote sound, stable, and sustainable financial systems and infrastructures. And as part of this ambition, we also focus on access to and usage of digital financial services in general, with the ultimate goal to bolster financial inclusion and build regulatory safeguards for individuals and businesses, including poor and vulnerable consumers and underserved population segments. And this mission is really something that motivates me on a daily basis.
Fantastic. And I know one of the key projects that you and your team work on is called the FAST project. So what exactly is the FAST project, and how does that fit into I guess the overall mission of the World Bank?
So about Project FAST, maybe to start with, historically, the World Bank has been supporting reforms in the field of payment systems and financial market infrastructures in more than 120 countries, and has been a leader in this field with works on different systems, real-time gross settlement systems, automated clearinghouses, credit reporting systems, etc. And so Project FAST is a reasonably recent project that focuses specifically a new generation of retail payment systems, often called fast payment systems or instant or real-time payment systems. And basically, these systems are defined by the fact that they support transactions on a 24/7 basis, and they are characterized by the instant transmission of payment messages and the instant crediting of the account of the beneficiary. So in short, fast payment systems are technical platforms that can foster interoperability of transactions between different categories of market players within a given market, including banks, but also including non-banks. And fast payment systems also, on top of that, facilitate the provision of a wide range of use cases, initiation channels, overlay services to basically make payments faster, more convenient, and more secure for end users. And so maybe in a nutshell, Project FAST is a global program that is supported by the Bill and Melinda Gates Foundation and that has several different objectives. The main one is to foster the development of fast payment systems around the world, while also ensuring that these systems are state of the art from a technology and accessibility standpoint, and while creating the conditions for rapid uptake across a diversity of use cases. So we do many different things as part of Project Fast. I will probably get back to it in the rest of the podcast. But to summarize, Project Fast aims to provide a holistic tool for policymakers and, in particular, for central banks to manage their journey in the design and implementation of fast payments from A to Z.
Okay, so kind of dive into this a bit deeper. As you know, I've seen the rise of fast payment systems in different markets across the world, but why do these systems, accelerate financial inclusion for local communities?
Fast payment systems can really bring a range of different benefits, and these benefits ultimately can lead to not only better financial inclusion outcomes, but also financial resilience, and ultimately through this channel, they pave the way for more growth and poverty reduction overall. So maybe let me mention a few of these benefits. The first one is that they are instant, right? So they meet the demand of end users for round-the-clock availability, and basically through that, they're allowed to reduce uncertainty for individuals, to increase working capital availability for small businesses, and to respond to the need for immediacy, especially, for example, in the case of emergency cash transfers in case of crisis or natural disasters. Second, fast payment systems, as I was saying, foster interoperability between different categories of market players, payment instruments, access channels, for example, mobile, but also internet, USSD payments. And through that, ultimately, they lead to greater competition within a given market. Third, fast payment systems can play a role in the transition out of cash transactions, and through that, they can drive down the costs for end users. On average, currently, cash is estimated to cost around 1% of annual GDP. So fast payments can help in reducing that cost. Fourth, fast payment systems can promote the development of different digital use cases. I'm thinking about, electronic payments, merchant payments, bill payments that drive usage of digital financial services and help, shifting towards a more formalized economy in a number of countries. Fifth, fast payment systems can act as an innovation layer for the launch of new added value services. For example, alias registries, so the possibility to pay with an email or a phone number, but also request to pay, standardized QR codes that can typically make the acceptance of digital payments much cheaper for merchants. Some studies show that it can be at least 25% cheaper for them to accept payments. So yeah, all of these benefits. One that I would add probably to finish with, fast payments can also play a role in cross-border transactions. So it goes maybe a bit beyond financial inclusion on the ground, but it can truly have a positive impact. I'm thinking especially about remittances that are often costly, on average more than 6% fees across the world. So it's over the double of the Sustainable Development Goals target, which is 3%. And lowering the cost of remittances can really have a positive impact eventually for people in terms of financial inclusion.
Yeah, definitely, and I think yeah, for sure agree with that point you've made there about remittances. So kind of let's look in practice at the development of these new fast payment systems. So what kind of role do central banks play, and also how is the World Bank positioning itself in terms of supporting those local partners?
Public authorities, and especially central banks, truly play a role in the development and implementation of fast payment systems. So fast payment systems can be owned and operated by central banks, but they can also be operated by public-private entities. It's the case in Egypt, for example, or be fully private entities. It's the case in Thailand, for example. On this topic, at the World Bank, we don't really have a one-size-fits-all recommendation, given that successful examples exist in all categories. But I think what really matters at the end of the day is the governance model and the ability to kind of balance public policy objectives and private sector interests to make sure that these platforms address the needs of the population in the long term. So something important to keep in mind is that regardless of the ownership and operating model, the central bank always has a key role to play in typically in market coordination and sort of in championing the design and implementation of the system, as well as in the oversight, of course, after the launch of instant payments. And I think this coordination role is particularly relevant today as fast payment systems increasingly considered as part of a broader stack of digital public infrastructures, typically digital identity data sharing systems, and as such, fast payment systems are truly a piece of the puzzle towards the broader digitalization of public and private services. How the World Bank can promote the development of fast payment systems around the world. So we really do different things. First, our institution provides financing through typically lending operations to member countries to help them build the necessary technical infrastructure underlying fast payment systems. Second, our team also provides policy advice to support central banks in their fast payments journey. So that can range from advisory on technical aspects relating to fast payment systems, but also technical assistance on the regulatory framework, for example. Third, the World Bank also regularly organizes capacity building sessions to share knowledge and good practice with our counterparts. So it can be at national level or through regional workshops. And finally, of course, we take part in global convenings on this topic, publish research with different partner institutions, with central banks, and that can help inform future developments in the space of instant payments as well.
Okay, so Thomas, clearly your team on this project have seen a lot in terms of examples and case studies from across the world. So what would you say are some of the the key obstacles or challenges for successful implementation of a fast payment system?
Indeed. So there can be several challenges and kind of risks existing in the journey towards the implementation of instant payments. First point I want to mention is that the rollout of fast payments is not an isolated IT development project. It's really a comprehensive journey that requires different steps. First, thorough market consultations and preparation to onboard all stakeholders. So the central bank has a strong responsibility from this perspective. Adaptation of the design choices to the characteristics of the jurisdiction. Fast payment systems are definitely not one size fits all kind of implementation, and they can have very different features depending on the market. Of course, sometimes building technical capability within the jurisdiction, so within the institutions, private players as well, building a conducive regulatory framework before the implementation. And a very important point that I already mentioned is setting up a sound and efficient governance structure as well. In addition to that, at a more high level, let's say, there are also a few enabling factors that can have a huge impact on the success of initiatives in the space of fast payments, and that must be tackled. I'm thinking about enablers such as the adoption of smartphones among the population, internet connectivity, but also mobile connectivity to allow for transactions based on USSD, the existence of an extensive network of agents and access points, the existence of legal provisions in related topics such as cybersecurity, consumer protection, the fight against frauds, and of course, something that should not be overlooked, building digital and financial literacy among the population.
Absolutely, yeah. I think, some of those elements you've mentioned there, digital financial literacy, smartphone access, internet connectivity are, really integral for any kind of financial inclusion, innovation, or intervention to work, right? Now, kind of something that is I've always been thinking about, right, is the differences between fast payment systems and then central bank digital currencies or CBDCs that have also seen a increase and rise in popularity. So kind of just try and break this down for me, Thomas, in terms of how they differ.
So actually, fast payment systems and retail CBDCs do share a number of similarities. They both allow for instant transactions between end users. They are both available on a 24/7 basis. They both rely on innovative underlying infrastructures that can be operated by the central bank. So they do share similarities. Having said that, there are also a few key differences that clearly distinguishes these two categories of systems. I would say that the main difference is that retail CBDCs are a new form of central bank money for the general public, and as such represent direct liability on the central bank, whereas fast payment systems allow end users to transfer private or commercial bank money. And on top of that, I would also say that fast payment systems and CBDCs present differences from kind of a risk and experience perspective. Fast payment systems have been implemented in around 100 countries to date, while retail CBDCs have only been adopted in 3 jurisdictions. So there is clearly a difference in terms of track records. And although CBDCs can present a number of opportunities, I'm thinking about programmability, composability of payments, for example. The fact that they have a more limited track record could also lead to increased risks. And I'm thinking, for example, about the risk of disintermediation of incumbent banks that has been mentioned several times and consistently in the literature. Actually, with colleagues from the World Bank and the BIS, we recently published a paper based on interviews with central banks that investigates how fast payment systems and retail CBDCs compare and why some jurisdictions have opted for one or the other. And our conclusion is that this choice is very contextual, and it really depends on basically the policy objectives pursued, as well as the legacy infrastructure and the existing market features. Maybe to conclude, another finding of our paper that I find interesting is that many central banks also see fast payment systems and retail CBDCs as complementary rather than substitutes, that many of them think that technical synergies between these two categories of systems can be leveraged in the future.
So Thomas, you mentioned there 3 countries, 3 jurisdictions that have adopted central bank digital currencies. So which countries are those?
So there is Nigeria, and then countries in the Caribbean, so the Bahamas and Jamaica.
Okay, interesting. So, as I mentioned at the start of the episode, the Swiss Capacity Building Facility have kindly supported the first series of the show. Now, you may be asking, who are SCBF? Well, the Swiss Capacity Building Facility provides catalytic financing, including technical assistance funding for product launches and scale-ups, financial education initiatives, and feasibility studies. Additionally, it offers repayable grants and impact-linked financing to early-stage social impact enterprises, driving the development and delivery of tailored financial solutions for low-income populations. To date, SCBF have supported over 200 projects, benefiting around 5 million people across 50 countries. And one such country is Madagascar, which faces unique challenges in financial inclusion, including limited access to reliable mobile money services critical for poverty reduction. Mobile money agents often encounter issues like unreliable e-money distribution, illegal fees, long travel distances, and delays, hindering their ability to serve communities effectively. To address these barriers, SCBF supported Flow Madagascar in developing a mobile money distribution model tailored to local needs. This intervention focused on removing disruptions in e-money distribution and eliminating illegal fees to improve service efficiency. By the end of the project, Flow was able to expand and grow their services in new locations and supported over 2,300 mobile money agents. These agents now serve over 370,000 clients, ensuring reliable financial transactions, particularly in agricultural reliant areas. Let's go back to the episode. So Thomas, to look now at the adoption of fast payment systems, there's quite a few countries that are leading the way. Talk to me about the kind of lay of the land and who is leading from the front in terms of the implementation and scaling of these systems.
So regarding the adoption of instant transactions around the world, as of today, fast payment systems have been embraced by countries and regions across the globe, with around 100 jurisdictions that have already implemented fast payments and several other jurisdictions that have plans to go live. Among these, the World Bank has been supporting more than 40 jurisdictions to date through financial and technical assistance, and we have also been delivering capacity building workshops and knowledge sharing sessions to more than 60 countries in total. Maybe two takeaways on the global rollout of fast payment systems. First, it should be noted that adoption is currently greater among advanced economies, while many low and middle income countries are lagging behind. And second, it should also be noted that the development of fast payments should be considered as an iterative journey, and that most existing implementations are far from a maturity stage and will definitely require subsequent upgrades in the future. So as I was mentioning, it's a long-term and continued journey. Maybe now in terms of successful examples in the fast payment space. So countries like Brazil, India, or Thailand are kind of leading the way and show how well-designed systems can, rapidly generate uptake and adoption. So in Brazil, they have a fast payment system called Pix that is owned and operated by the Central Bank of Brazil. And today, in terms of adoption, 9 out of 10 small businesses rely on Pix to accept transactions, and more than 80% of the population uses Pix as a payment method. In India, the fast payment system is called UPI, and today around 400 banks are live on this platform. More than 260 million people in the country use the service, and UPI represent around 2/3 of all digital payments in the country. So that's really many users in the jurisdictions. In Thailand, they have a fast payment system called Prompt Pay, which has been very successful. Today, more than 90% of the population in the country uses the service, and some independent studies estimated that Prompt Pay could generate an extra 2% of GDP by 2026, which is truly considerable. Maybe another example that I want to mention, in Pakistan, they have a fast payment system called Rast that went live in 2021, at least for the first few use cases. And so this implementation had different objectives, but something that should be noted is that it helped delivering social assistance to more than 3 million beneficiaries in the country. So it kind of illustrates this capability of payment systems to cater for, emergency situations and delivering digital cash transfers to people that need it urgently.
I'd like to kind of hear from you and understand, where you think this is going as a movement in the next couple of years, especially with the rate of new technologies that are being developed. What kind of trends are you seeing within your team for the scaling of these types of systems?
I believe that in the future, adoption of instant payments will definitely continue, and that most countries around the world will have such a system in the next, decades, probably, because I think they're really a centerpiece for efforts in terms of financial inclusion and modernizing the payments landscape in the future. That being said, I think they are not the only innovation that is relevant currently in this space, and so they will have to, in a way, be associated with other developments. I mean, we already talked about CBDCs, so I think there is a strong trend towards also usage of digital ledger technologies and tokenization, including on wholesale and settlement aspects. So we talked about retail CBDCs, but there is also truly a question of the impact of this innovation in the wholesale space and in financial market infrastructures. Beyond that, I think that, fintech is continuing to bloom with kind of new generation technologies that are arriving. So that will definitely play a role in the future. We're increasingly talking about open finance that kind of like allows to rely on more data for many different use cases. And I think there's definitely a synergy here between fast payment systems and open finance in the future. So all of these things will play a role, and I think it's going to be a very exciting next few years in the field of payments. Typically, to conclude, a technological innovation that is relevant for CBDC, but it is also for fast payments and could be leveraged in the future, is also offline payments. We didn't talk about it, but many people that are, today unserved or underserved because of connectivity issues and things like that. I think that offline capability can definitely play a role as well. So yeah, very exciting for the next few years.
Yeah, for sure, Thomas. I think these are, so many things to keep our eyes open for with those trends. So thanks so much for being here and joining me on the show.
Thank you so much, Jack.
This was Series 1, Episode 1 of the Financial Inclusion Unlocked podcast, and we can't wait to show you what we've got in store for the rest of the series. Subscribe and follow us as we dive deeper into unlocking the potential of financial inclusion. And by the way, Episode 2 and 3 are out right now. Shout out to the Swiss Capacity Building Facility for sponsoring our first series. You can learn more about their work and how they are innovating inclusive finance, and how you or your organization can support their work to fund more transformative projects at www.scbf.ch.